Let's get across the market open now. Mark Gardner joining us from MPC Markets. Mark, welcome to Monday. Fairly thin trading today, you'd expect, because half the country's on holidays.
Yeah, absolutely. New South Wales particularly for ANZAC Day, and I don't expect there to be heavy trading conditions, that's for sure. And all things considered, the SPI was only down sort of 3 points on Friday night as well. So whilst we've got crude opening higher this morning, which might weigh on the market a little bit, I don't expect us to have too much action today on the domestic market for sure.
All right. Well, a lot of action over the weekend in the US. The ongoing situation in the Middle East very much overshadowed by what happened in Washington on Saturday night with an apparent attempt on Trump administration officials at the Correspondents Dinner. Are we likely to see any sort of market implications from that, do you think?
I don't think there'll be any market implications. It wasn't, there were no casualties, obviously, and things like that. So it was a bit of a scare for the president. As per, very typical Trump, he's using it to his advantage here to press a few things like the White House ballroom, etc. In a 60 Minutes interview, I think that starts in around about the next half an hour or so, which is, coincidental. But yeah, I don't see there being any market. It wasn't related to any necessarily any terror group, etc. That would require any sort of response from the US government. So I think it'll be just largely overlooked. We've got a massive week ahead of us in terms of US earnings and central banks. I think that'll be the main focus for markets overall. We've got the Bank of Japan, the Bank of Canada, the Bank of England, the FOMC. US advanced GDP numbers, which will have inflation in them, and Aussie inflation on Wednesday as well, not to mention 16 trillion in market cap in earnings overall from the likes of Apple, Amazon, Meta, Google and Microsoft. So all of them are trading at at relatively low PEs or forward PEs against the 5-year average. As we know, we do tend to get the US market's almost designed to beat. 80% of companies normally beat at most earnings seasons, so we'll probably expect a little bit of buoyancy in that. The market seems to be very over the US-Iran conflict as it stands at the moment, and seems to be ignoring it, but we'll see once we start to get those inflation and growth numbers Wednesday night out of the US or Thursday night out of the US as to how long they can ignore this strait being closed and that those elevated gas prices.
Something to behold, though, what we're seeing on Wall Street at the moment, Mark, isn't it? Obviously buoyed by those corporate results, but the S&P and the Nasdaq are pushing to new record highs.
Yeah, absolutely. And the SOX index, which is not an index we normally talk about, the Philadelphia Semiconductors Index, 18 consecutive positive sessions, which is a record consecutive amount of sessions overall. And you're even seeing like the likes of Intel, which was up, I think, 23% on Friday night, which has normally been a pretty poor performer overall and really only clung on to, its, from getting that government backing and things, because it's the only foundry manufacturer in the States of those CPUs. But it's been a very long wait for investors. I think that's the first record high in Intel since the year 2000, so 26 years if you were unlucky enough to buy the high back there in 2000. Even Texas Instruments, which has got the analog semis, where they had a really impressive result and were up around about 17 or 18% as well. So, that memory chip and that semiconductor part of the of the market doing extraordinarily well, and but fairly mixed for the rest of the market overall. So I don't expect the market to stay up here. I think people are pretty sceptical. They're there was reportedly a lot of hedge funds who had to cover shorts, thinking this US-Iran conflict was going to weigh on the market a hell of a lot more. We've seen similar patterns back to 2022 where we had a bounce out and then we fell into June. So with stocks valued at where they are at the moment, and and likely inflation and slowing growth numbers coming out of the US in the coming months, I'd be more taking the chance to be selling here and trying to buy the dip, say, June, July area later down the track, because I don't think these will be, this market setting records is not going to be sustainable with the economic numbers that are going to be coming.
Now, as you mentioned there, Mark, aside from those key earnings results this week, also some central bank decisions, the Fed, the Bank of England. What's the expectation there, do you think?
Well, I'm sure there'll be a lot of talk about inflation, but I think what the main theme will generally be is we don't know. We don't know what the economic fallout's going to be from this. Bond yields have already headed a lot higher. Particularly in the UK, they were expecting kind of rate cuts, and now they've gone to rate hikes. So I sort of expect this to have a similar situation to, the previous Iraq conflicts, where, the price of fuel will dent the consumers so hard that it will end up slowing growth, and we'll have a reversal in bond yields to the downside at some stage. But as a central banker, you just don't know. So many of these countries had fairly sticky inflation leading into it, and realistically, they're going to be very mindful of, because that's their main mandate for most of these central banks, is to make sure that inflation remains contained. But overall, I think that the price at the Bowsers now costs, I think, if even on an optimistic case of returning to normal, it'll be somewhere in the realms of $32 billion to the US consumer, and a hell of a lot here in Australia as well. I don't have the exact numbers there, but we would certainly, that's certainly going to really curb consumer spending moving forward. And we did see that in consumer numbers hitting a record low on Friday, and consumer inflation expectations in the States up around into the 5% mark.
Well, and we also get inflation data, quarterly inflation read here too, Mark. That's going to be critical, certainly ahead of the next RBA meeting.
Yeah, absolutely. So I think we're expecting 1.3 month on month, but it will be. I think everyone will be looking through the petrol numbers, particularly, and and looking at the overall trend in the core and the trim mean. Yeah, look, it's a very tough time to be a central banker at the moment, and I do not envy their position in any way, shape, or form.
All right, so just what is your expectation for the local market? Obviously, as mentioned there, SPI futures on Friday are pretty flat, thin trading today. So what are you watching more broadly in the local market, Mark?
I think for the Australian market, we will underperform the US this week. I think those US earnings will keep the market fairly buoyed. And, the US is very much, or US investors are very much looking through the Hormuz disruption and the US-Iran conflict, and they're much more focused on their domestic earnings. I expect those earnings, because a lot of them are very much related to that data center build out and cloud, etc., and AI. And particularly with those low forward PEs that those companies are on, those results may keep that tech sector fairly buoyed, and they, particularly the semis and memory, etc. If the demand is quite large still, I expect there'll be a couple of layoff announcements as well. Meta's already done that in fairly significant numbers. But the Australian market here, really, I mean, you're watching the oil price, which is sort of sitting around the 96.50 mark in WTI here at the moment. I think that's, we'll be more focused on, on what damage that's going to do to global growth, and obviously a few fears around around our hawkish RBA. So I would expect our market to probably be a touch softer this week compared to the US, and then once we get through these, the 5 of the Mag 7 earnings. We've only got NVIDIA left, and then I think you'll start to see the US market start to roll over maybe next week.